All right, boom. So we got a huge move on Bitcoin, man. Huge move. We knew it was definitely time for Bitcoin to find some type of floor to look at. It was actually this call from Monday that gave us the setup. I believe, yep, it was the one from Monday in this 44.62 zone. So we got, of course, our call price. And again, we go through our 3 steps. So the call price was 44.662. So let's put that back on the chart. 44.662. And I like to make that black generally. We're gonna make that nice and thick. So that's our call price. That's where the scalper called this buy right here. We'll put this on there too, so we can know. This was when it happened. Boom, right there. All right, so we go through our rules. First thing we want to do is what? Switch to our line chart. All right. We'll switch to our line chart, and we want to identify an area of resistance, right?
Resistance.
Perfect. So of course, to identify the area of our resistance, we are going to look back to the left, and we're going to look for where we have multiple points in the market so we can find a smooth resistance area where we can look for a break. So if I look back to the left from right here, I got a couple. And generally the way that I like to do it, I like to find a resistance zone, not just, one point, but I like to find multiple points so that we have a good zone that we're looking to break. So again, we look back to the left from our line chart, and we want to look for the areas where the market is touching. So we got 1, 2, 3 touches there. Generally, we want 2 to 3 touches for us to be able to put a nice trend line there. So that's a good zone there. And then generally, again, I like to find one more, so we have a little bit more confluence. So if we look right here, we got another one about right here. Look, if we look, remember we're looking back to the left from here. And of course, it's a little subjective, but we can count this. 1, 2, 3, 4, maybe 4.5 touches. We can see clearly this was support. It ended up breaking and retesting in this zone, within our zone right here. And let me actually do this. We're going to make this green because this is where we're going to be looking to buy. Within that zone right there. Perfect. Let's actually, boom, we can zone it up even better. Perfect. So that's right there. So in this area, we can see price came down, ended up breaking through and testing this. So of course, the support flipped to resistance here. Came back through, same thing, broke through, came back and tested the zone again. So now this is support again. Same thing happened here. Broke through, came back, test, boom, now it's resistance. So I want y'all to start getting used to seeing that where resistance and support is flipping. Generally, that's going to be our good zones. And normally that's where this wonderful algorithm that we have is going to call out the trades as well. So sometimes we'll see it like this, kind of where they'll be all bunched up within that same zone. Generally, that's because this is a strong support or resistance zone. Same thing up here. So boom, this is step 1. We identified our resistance point that we're looking to break. All right. So at the same time, I also want to go ahead and identify a support, so I'll know where it'd be a good place to have a stop loss. If I look here, this is 1, 2, 3, 4, 5 touches roughly. So I feel like this would also be a good spot generally for a stop loss. And of course, Sean teaches us add an extra 100 pips on that. So we're at 44,245. So let's drop that down to 44,145. You can have that as a stop loss potentially. The other stop loss potentially, of course, you can do it just under the last low, 100 pips from the last low. Our last low being here, 43,916. So let's go down to 43,816 roughly. that's also a good zone for a stop loss. So we've identified a couple of things using the line chart. We got our area that we're looking for the market to break. And we also have an area of support where potentially we can put a stop loss for our potential trade setup. So boom, we're gonna flip back to the candles now. And what we're looking for generally is the break and close, okay? Break and close of our zone. So we actually got the break and close of the zone, you could say roughly there on this candle. But then it did generally what we anticipated it to do a little bit. It came back, tested the zone. You can see price stayed within our zone. So this is where we're looking to take the trade from. So we got the break and close, came back to test our zone. So now we can look at entering on this candle here, or we can wait till this candle closes above, and this candle actually closed above. So you potentially could have entered the trade here, or you could have entered here. Now, I'm gonna put on blue right here. Blue is where we starting at. Blue is them blueberries. Y'all know about them blueberries. When that account go blue, everybody's up. Everybody's happy. Now, of course, us being a little more seasoned traders, we know generally the market is going what? It's going to give us this break, but then it's going to give us a nice retest as well. So we got a huge break, huge push up. This wick was crazy. At some point, you should have definitely already have moved your stop loss into profit. Generally, after the trade moves 300, 400, 500 pips, you at least want to put your stop loss 100 pips up so that if it does pull back like it does, it closes you out in profit. And then you do what? You just wait to be patient till price comes back in this zone and you look to enter again, but you still want to follow the rules. Remember, we want price to be above our 50 EMA, right?
That's for buys, right?
Yep. We want price to be above this 50 EMA. And as long as price is above this 50 EMA, we're still good. And remember, y'all, the market is going to generally move like that. It's going to go up, come back down. It's going to go up, come back down. So we already know this is the bullish momentum that it's giving us. So we would have looked to get in here the first time. We probably would have got stopped out unless you somebody just as comfortable holding your trades. So boom, it came back here again. You could potentially enter here again as well within our zone. We got the wick here, but we see when this candle closed, it closed here right at our 50. So remember, our 50 EMA also is acting as support to hold price up. And we can see the market respected our 50 EMA and of course ended up taking off. Now, additional confluence, y'all, we got to remember the simple things. If we go back to our line chart, we can also look at the previous downtrend that the market was giving us. This is our previous downtrend. We'll go back to candles and we can see, let me make that a little bit thicker. We can see, and we're not even, this is institutional candle. This was probably some news or something crazy happened. We're not worried about none of that. Market corrected like it was supposed to after a big impulse like that. But we can see the market ended up breaking this structure. We broke this structure here. Same thing happened. It broke. This wick came up, tested this zone, and then ended up pushing it up. So if you start to recognize a shift in the trend as well, you can potentially start to look at getting an early entry. And then when the scalper does call it out, that's just additional confluence for you. So once you saw this break, retest here, you could potentially enter on this candle or this candle here and already be in the trade. Now, of course, your other rules aren't completely followed, but it allows you to, of course, watch the market a little bit and get a little bit better position and kind of wait for the market to do what it wants to do. So you got several points of confluence here to let you know that the market is getting ready to shift. Now, what I really like and what was really, spot on with giving us this setup, if we go and look at Bitcoin, and let me remove everything I got on here. And I got it on the hourly chart right now. I'll put it on the 15-minute too, so it'll look the same. Same thing, same setup.
So basically all our trades is pretty much on the 15-minute chart.
Using the scalper is
using the scalper.
15. Yeah.
Okay, using the scalpers we're on 15. Okay.
Scalper is going to be on the 15.
All right.
Now, of course, whenever you get into trades from swipe coin, whenever you're sending those out, generally those are going to be the ones from Picasso are going to be on the 4-hour chart.
Okay.
And then the ones from Nick, sometimes Nick will use the 15 and the 1 hour as well, but you'll just want to you'll want to use the different time frames to look at different things for confluence to see what the market is doing.
Okay.
So if we look at our 15-minute chart, and if we look back a little bit, this is our last real high, right? So we already know we got a high point here. If we use our fibs based off of where price was at already, if we look back to the left, our last low was like here. So if we grab it from wick to this wick here, what we got, y'all? We got our retracement to the 786, 886 zone. And we already know potentially that's where buyers do come in for the next set of bullish momentum. So boom, we got our 50% 618. We already knew potentially that buyers would come in here. They tried to come in here, but the sellers were still strong. We got that huge imbalance there. Huge imbalance. Price did stop right at the 618. It respected a little bit, but it ended up breaking through. And look, same thing again. It broke through, retest, came back into the zone, hung out a little bit, tried to take off. Still a lot of sellers there, still a lot of sell pressure. So once we saw that break down, we should already know, and we can already actually in our minds be looking at putting pending orders here. So if we had been looking at this setup early, we could have potentially already had pending orders in place. And if we look exactly what price did, it wicked our 886. It ended up wicking our 835 right here with this candle. And of course, and we knew it went through the 786, but potentially you could have had pending orders down here already ready to activate. And then as far as your stops, remember, you can put your stops under that last real low or that last wick. So you could have had your stop here and you could have had pending orders in, of course, with the right lot size. And you basically would have had a risk-free setup. You would have had 3 setups potentially that would have already just kind of went into profit with minimal drawdown. And this thing ran, y'all. From where the scalper caught it, it was roughly 3,000 pips. But if you had caught the 886 entry down here, I mean, 4,900 pips. For some people, they done trading for, a day. Some people, they done trading for a week. Some people, they done trading for a month. Some people, they done trading for the year off that. That's a huge bag right there, y'all.
Wow.
And ultimately, of course, the scalper is giving us the confluence with everything else. We know that Fibonacci is programmed into the market. We know that this is what the big money is using. This is what the banks are using. This is what the hedge funds are using. This is what the market manipulators are using. We know that they're using Fibonacci. It's coded into the market.
Okay.
This scalper just gives us extra confirmation that this move was getting ready to happen. And if we use our regular technicals, we break this down, we knew this was getting ready to happen. Of course, the scalper is only supposed to give us, we're only looking for roughly 500 to 1,000 pips, I say, out of a move. But of course, getting 300 to 400 here and there, 300 to 400 here and there adds up. But then when we get these setups like this, if you can take advantage of them, that's going to, of course, allow you to, limit your trading. Now, boom, I caught this setup. I don't have to trade for a while, or even if I do want to trade, I can be a little bit more patient now, let the market do what it wants to do before I look for the next setup. And if we go back here, okay, boom, we saw it started consolidating out now a little bit. Let's put our new fib on it. We got our low point here. We go to the high point here. What is price doing? It's sitting on the 236. What do we know about the 236 level? For this to be an actual pullback, we needed to break past this 236 level. Price has touched the 236 on the 15-minute chart 1, 2, 3, 4, 5, 6 times roughly. So what does that tell us? That tells us there's still a good amount of buy pressure here at this level. And if we look back down at the 382 level, we can see it was definitely a little bit of resistance there. It got broke and it's continuing to get tested. Now, one of two things is going to happen. And I think it's going to happen within this 236 level based off what we know. Either one, we're going to get a breakout back to the upside, or two, we're going to get a breakout down to the downside. But what we're looking for to tell us that, same thing, y'all. We're going to go and we're going to want to, of course, the scalper is going to give us an indication of where. It already gave us one sell setup that we're looking at. And we'll go back here first just so we can use what's on the scalper. It's got it at 47,600, right? So at 47,600, I'll make it a little bit thicker so we can see it. We go through our same steps. I'm gonna switch to the line chart. Oh, let me move this down a little bit. I'm a little bit off. There we go. Switch to our line chart. All right, boom. If I'm looking for a sell, I want to identify my support level. So I got the sell called here. I look back to the left. Where do I have points set? I got one here. 1 point, 2 points. And then if I look to the left, I really don't have any more points here. But I do see, of course, where we got this price level let up here. I had 1, 2, 3 points, 4 points roughly. So again, this is our new zone that we're looking to break and close, okay? So I'll go back to, before I go back, let's also identify where potentially we'll have a stop loss if we're looking for a sell. So we got our 50 EMA. We already know if we're looking for a sell, price needs to be under.
Right,
And
so
then,
it should be a sell, it should be under the EMA, right?
right, we want price to be under the EMA.
And then to
Now, another thing I want to look at is potentially where I could put a stop loss. So if I look here, I can definitely see with 1, 2, 3, 4, 5, we can see price is sitting kind of on this red line. And then here, price is testing this red line a little bit. So this potentially add 100 pips to this, which is 47,977, 47,977, roughly around this area. If I'm going to have a stop loss, I'm putting my stop loss up here if I'm looking at getting in this sell setup, but I still want to wait for my confirmations. So my confirmations being, I want my break of the trend. So let's look at the overall trend real quick. Up, back to my line chart. My overall trend is here. 1, 2, 3, 4, 5, 6. 6 touches on that trend. We got the breakdown. Now, of course, some of y'all being snipers, y'all gonna also see this too. Once price ran up, started consolidating, you got your trend here. You can see markets respecting it. Once you see this break of trend right here, you should already be looking for what? The retest. It came right back up and retested the zone, y'all. Break, retest. Because you a sniper, you putting a sell in up here. So boom, you done got in this trade early. You've entered on the retest of the break of your structure. So blue line. Now I'm already in the sell up here.
Right. Sell
And
is
then-
above, when a sell is when the EMA is above the exponential moving average.
No. So the sell,
This is where I'm
based
a little
off of the
confused
scalper
at.
rules, you wouldn't get in until prices under the EMA.
Okay, okay.
But just off of basic market structure, with our uptrend being broken here, and then
Right.
price coming back to test the zone,
Testing,
but not break it, and then we did not get a candle close above our last high
last high, yeah, okay.
being
I
here.
see that.
We know that this is probably getting ready to go. There's a good chance this is getting ready to go down like it did.
Okay.
So now I got in early because I was patient. I waited for the break, retest. Now I got boom. I'm in here. I caught 600 pips
Okay.
on a slight move. Maybe I put my stop loss, 200-300 pips in profit. I'm still in. It came back again. It didn't break.
Right. So you're still in
EMA.
it. In there, you're still in it, right? Yeah.
You're still in it. And then also, this is where the scalpers call it. So the scalper calls it here.
Okay.
And now I'm just looking for another entry based off the scalper. So same thing. Scalper broke through our zone here, came back to retest it, and then it went. Of course, it ended up pulling back. But at this point, I've already moved my stop loss and profit, and I've taken 2 trades, and I've won 2 trades there. And now I just kind of got to wait for my next setup. But looking at this now, low key, we might have a setup now, y'all. It came back right here where? In our zone where it tested earlier. So we know it's sell pressure here. And if we look at the volume that we're getting in these candles, engulfing candle here, next candle still pushing down. It's letting us know that there's definitely a good amount of sell pressure. And look, did these break these highs over here? Nope. So now we're really starting to get another downtrend. We're starting to get a downtrend now. So this thing, as far as using the scalper as confluence with general market structure, definitely makes it easy to get in and out of these different setups using the scalper, y'all. I just wanted to show y'all how awesome this tool is, along with throwing a little bit of fib sauce on it, how you can really run up a bag. Because I mean, you catching a good amount of pips with these moves. So boom, you say you caught this one, depending on where you hold it, 600 pips. If you held it roughly 900 pips there, if you got in on the retest here, when it came back up, but didn't break your high, started pushing down, another 600. Depending on when it came back, you might have caught, 300-400 pips on that. And then you just patient. Now we got back up here. Had you actually been, sitting here playing this, or you got your, this is where pending orders come into play too. After this market already ran, we already know, okay, boom, it might give us another retest of this zone, which it did. If you had a pending order already up here waiting, your pending order would have activated in your same zone, and you would have been up what? Let's see, another 200 pips roughly. But ultimately, this tool is for scalping, but you see how we can use it for swing trading also. And then we can also use this trade, use this tool as confluence if we are looking to swing trade to find better entries. So of course, if you had took the entry down here at the 786 or 886 zone from this big move that we just got, now you can potentially, hold this trade, for the next couple of weeks, the next month or so. But ultimately, you got a sniper entry down at the bottom of the previous low. So you can take partials along the way. You can close your trade along the way, or you can, move your stop loss up. You can do a combination of those things. But ultimately, it puts you in a position to be able to scalp, swing, take profit, take partials, and overall be profitable and take trades that have minimal drawdown, just off using the scalper along with a little bit of Fibonacci. Let's see. Let me pause this real quick.